This is the future of finance.
This episode is made possible by Metis Global Partners. Hey everybody, welcome back to the future of finance. Thanks so much for joining. I'm George Dyer. I hope you're all doing well. And today we have another in our series on responsible AI. It's a good one with Gaurab Bansal, who leads the Responsible Innovation Labs, or RIL. We talk about RIL's work with startups in the tech space and how they help them to integrate good governance policies and practices around AI and to reduce the potential negative impacts and externalities that some of these companies might inadvertently cause, while at the same time meeting them where they are so they can continue to innovate, stay alive, and grow. I wanted to have Gaurab on because as the AI boom expands and we see so many startups in the space, it's critical that they have these perspectives built in before they scale, because it can be much harder for larger companies to do so. We talk about some of the tools and resources endowments can use to engage with their external managers to ensure that they're helping their portfolio companies do this as well. Gaurab's a really smart guy with an impressive background as a lawyer, with roles in the Obama administration, and a lot more before taking the lead at RIL. So I hope you enjoy it. And now here's Gaurab. Gaurab, good to see you. How you doing?
Hi, George. How are you? Thanks for having me.
I'm doing great, thanks. Yeah, thanks for being here. I'm excited to dive in, catch up on all your work, and share it with our audience. How's the new year going so far?
We're just we jumped into the deep end for our work. We held a big event in Washington D.C. last week, so
nice.
Brought together some folks to talk about AI and its potential impacts on the workforce. So maybe we'll get around to that topic later in the conversation. But we started off full speed.
Yeah, nice. A good event though. All went well?
Yeah, it was fantastic. We had 60 some people, and we were there talking across silos. So we had policymakers, we had people from labor, we had startups, investors. So it was a fantastic kind of cross-sector conversation on what will be a major challenge for all of us coming up, we think, in the next decade or so.
Absolutely. Very cool. Well, yeah, we're going to get into all that. Are you back home now, or are you still on the road?
Back in Seattle.
Yeah,
back in Seattle.
Nice.
So.
Awesome. Well, yeah, excited to jump in and hear more about Responsible Innovation Labs and all that work you're doing. But to give people a little context, tell us a little bit. I know you've been in this space for a long time, including working with the Obama White House and a bunch of other roles. But just give us a high-level overview of kind of how you got into this whole tech space.
Yeah, my introduction to tech, besides being like an avid geek and consumer of tech, was when I was a lawyer. So when I was practicing law, my practice was with startups and with venture investors. So it was probably the rise of the cloud computing era and probably the proliferation of mobile devices and that you see now we take for granted on the app stores. But that was my practice, was counseling and coaching early stage founders on all the issues. We were essentially their outside general counsels and working with investors on the other side of that. So that was a fantastic experience. And from there, I got to experience life in policy world and politics, working for President Obama in a couple of capacities. And here we are now working back and working with startups again, and investors as well. But on this idea of responsible innovation. So it's a treat to work with builders day in and day out.
Yeah, nice. On the White House role, was that kind of focused on responsible tech at that stage, or was it more just tech policy more generally in terms of how to support the ecosystem? Or
no, my job, to the extent I was working with technologists, it was largely around management issues across the cabinet departments, and how do we ensure that technology is being deployed. Your listeners may recall when the Obama administration rolled out healthcare.gov, and that didn't work.
That's right.
Which now seems like a quaint issue.
Well, that was a big deal.
That was a real issue in the administration. That one, there were other risks like this lurking across the cabinet departments, and two, that the old way of deploying technology wasn't working. And so I think that kicked off a sprint where really we brought in technologists to help us really think through that. U.S. Digital Service, 18F, some of these initiatives that were launched by others, my colleagues, and that we were helping to bring to bear across the federal government.
Gotcha. That was like helping the government better use tech.
Yeah, that was part of my job, and I had other jobs too. But that was probably the biggest nexus with tech.
Yeah, very cool.
that time.
Nice.
Very different era.
Yeah. It's amazing how fast things change. But tell us a little bit, how did that lead you then to be doing this work you're doing now with Responsible Innovation Labs?
Well, in between working for President Obama in this role, I spent some time in philanthropy.
Mm-hmm.
And one of the areas of philanthropy that I focused on was this sort of nascent field of public interest technology, which is very much focused on how do we, I think people would describe it differently, but from my perspective was how do we build a cadre of practitioners, of technologists broadly defined. So those could be people who are actually building the tech product itself. They could be data scientists, they could be lawyers, they could be policymakers, but essentially looking at this idea of, again, how do we bring this really powerful force of technology and how do we bring it to bear to the problems that we have in our country and beyond every day, be that in government services, be that in inequality, be that in health. And so it was, we felt, along with, I'd give the Ford Foundation tremendous credit for helping to kick this off. And there were other funders at the table as well. But how do we create this field? And so in my role, I was helping, sitting at that table and helping to get it going. And then I think one of the things we really grappled with was, what's the role of the private sector? Because obviously the private markets are, one, scaling technology much faster than anywhere else.
Mm-hmm.
And that got me curious about this idea of responsible tech. And obviously this coincides with an era when we were seeing maybe the externalities of social media.
Yep.
And I think there's this realization more and more that, technology is net positive, but it also creates unintended consequences, which we need to get our arms wrapped around. And then AI is starting to take off in the background. And so I think the stakes are getting higher and higher. And that led me to RIL and the work we're doing today.
This episode is made possible by Metis Global Partners. A global equity solutions provider managing over $5 billion, Metis offers both active and customized beta strategies for institutional investors. Through their guided beta product suite, Metis provides custom passive equity solutions to clients desiring sustainably aligned equity and real asset portfolios combined with a high-touch partnership. Founded in 2013 in San Diego, California, Metis serves a wide range of institutional clients, including foundations, endowments, nonprofit, university, public plan, corporate, and family office clients. To learn more, visit www.metisgp.com. That's METISGP.com. Or email info@metisgp.com. Yeah, gotcha. And so when was RIL started? How long have you been there?
RIL started circa, let's call it 2022 approximately. I joined in 2023, but the short sort of origin story of Responsible Innovation Labs. So we had early employees from Stripe. You're familiar with the payments because your listeners are familiar with the payments company, which powers so much of our e-commerce infrastructure. Literally, their motto is like building the infrastructure of the economic infrastructure of the internet, I believe. And they joined together with one of their investors from General Catalyst. And I think their feeling was there's a lot of acknowledgement that this idea of responsibility and innovation matters, but there were very few places to build the know-how, to understand the methodologies and also sharpen the mindsets. And hence was born Responsible Innovation Labs as a hub, as a community hub, a practice hub, and a place where founders, investors could kind of workshop these ideas with each other. And so that's been our mission for 3+ years now, is how do we work with founders primarily, but also how do we support investors and people in your audience who are thinking about this and understanding that this is a major vector of change and how to be responsible over time.
Yeah, nice. And for people who don't know General Catalyst, tell us a little bit about that firm.
So we're independent from General Catalyst, but people should know General Catalyst. They are, I think I heard the other day, maybe one of the 3 largest venture investment platforms. And I would say they are much more than a venture firm. I would say their core is around venture and seed stage investing, but they're doing much more than that. And they very much are investors in this idea of economic transformation through technologies like AI. And so they also believe that if you're building these world-changing technologies, that you should be thoughtful and intentional about how you do so. And hence, we've been grateful to them for incubating responsible innovation labs. But they are a major player in the ecosystem and the emerging technologies. And I would commend them to all of your listeners to be familiar with their work.
Yeah, nice. So on the Responsible Innovation Lab's homepage, it says you'll help founders build responsibly to survive and win while advancing human flourishing and reducing negative externalities, which I think is a great framing for tech startups. But yeah, tell us a little bit about how you do that when you're working with these founders.
Well, I think it's important to start with the first part of that, which is survive and win. Because I think when you're talking to any early stage founder, by and large, the early motivation is truly survival. You come to this work probably because you have a great idea, you've seen a problem, you're trying to solve it. It may be your life's mission, and you probably see something that the rest of us don't. And that is a pretty powerful, it's a pretty powerful instinct, and it's one that we take very seriously. And that survival period is really critical. And so I think for us, when we come in, it's not to tell founders what to do or how to do it. It's really to make sure that what we are talking about with this idea of responsibility is in service of that survival. And ultimately, it only matters if you win. And by that, it means if you're commercially successful, if you're returning capital to your investors, if you're increasing your customer base. And so every founder I know is really obsessed with that, they're obsessed with winning, but really that's proxy for I built a great product that people are paying for. And so at the end of the day, responsible innovation, we believe, is in service of those missions of both survival and winning, but it's a bit countercultural. So we are trying to reaffirm to founders that that's in fact what our interest is. It's their interest. We think it leads to better P&L. We think it leads to better products, more trust with your customers, and vice versa. So that's where we start. And responsibility is not just what you build, but it's how you build it. And it's not just what you put out into the world, it's also what you avoid. And so hence the avoiding negative externalities to the extent possible, or minimizing them. And then of course, building something that is net positive for the world, beyond just the value of the company you're building.
Yeah, that's great. So, I mean, you're really meeting them where they are, basically, and understanding what they're trying to do first and foremost as with a company, and then making the case for why these types of responsible approaches are going to benefit them and their company.
We find our experience is like, we cannot come to a founder with like a checklist. Certainly, we believe in checklists, and that's fine, but nor can we come to founders and think of ourselves as being in the business of compliance, right? Like ultimately, founders have to move fast. We cannot slow them down. And we have to help them see that they can both move fast, build the product and company they want, and be mindful and intentional along the way. So I think that culture of the ecosystem is very much a big part of what we're trying to do. And we think is essential. Otherwise, we won't be, founders won't really listen to us, candidly. So that's a big part of what we've learned and what we try to put into action every day.
Right. So tell us, what are some of the biggest negative externalities that you see stemming from tech, and particularly AI?
Yeah, let's take AI. Let's start there because it's very much obviously on top of folks' minds. I think like we try to be clear, like we can't predict the future. I think you could go to any number of smart people and they'll tell you with strong conviction how the AI world is going to go and evolve. And I'll leave it to others to make the predictions and prognostications. We try to think in the near to medium term with some confidence, right? So I think the externality is, I think anybody paying attention to AI will see that there will be some impacts on workers. Whether that's a low scenario, medium scenario, or high scenario of disruption, it's a little hard to predict. And it may look different based on sector, based on job function, and so on. So there's not one easy answer, but we know that there will be some impacts on workers. Some of those will be positive. We hope most of those will be positive. But if it's like real talk, we know that some of them will be negative. There will be some disruption. There will be some dislocation. And we saw that with automation in manufacturing couple decades ago. And so we're going to see it again with AI across a number of sectors. So workforce is one of them. I'm sure a lot of your listeners are focused on climate. And certainly we're seeing the power demands of AI and compute. I think we would be, well advised to be thinking about the climate impacts of AI. And I think that will hopefully lead to adoption, frankly, of technologies that we should be adopting anyway. But perhaps the acceleration of AI is a good reason to do it, or a good reason to innovate, both on the chips and the needs of power and so on. So I think climate is one, energy consumption is another, workforce is one. And then I think, we've seen in social media maybe a more quaint version of this that's about to go into hyperdrive around misinformation, disinformation, social cohesion. You have AIs out there that can replicate voices and identities. We see the impacts on creators. So I think, the impacts on us as people, how we coexist with each other is maybe I don't think that's given enough attention, I would argue. But certainly there are smart people in civil society and elsewhere who are thinking about that. And I'll just give you one more, which is that AI can also put into hyperdrive the ability for people to create harm, be it around critical infrastructure. We clearly see AI as a focus of geopolitical concern. And I think that sort of has very real implications for physical and human security. And we can go down the line. So there's a number of impacts. Potential impacts of AI. We believe in fundamentally deployment is important, transformation is important and overdue. But again, it's important to be thoughtful about unintended consequences as you go about this work.
And did these issues show up differently in different sectors? I imagine they would, right?
Yeah, it looks different. There's some basic, let's call it methodologies that would apply across sectors. But yes, how responsible AI looks in healthcare will be different. Defense and security will look different than fintech and so on. So there's not a one size fits all. And frankly, what we've also learned with startups is that it'll look different based on maturity. So your earliest stage startup, honestly, mostly they should focus on building their product. But we want to get them on an escalator of intention, systematizing their own values. I heard from a founder one time, look, I'm a responsible person. I'm good. And which we say, that's a great start, fundamental, super important. And also part of the founder's job, whether it's on responsibility or anything else, is to inculcate your organization with the values you think are most important. And it's not enough to just start with the person. It's necessary, but not sufficient. And so a lot of our job is right. Yeah. And if you can't do it with 7 people, it's going to be really hard to do it with 70, and it's going to be hard to do it with 7,000 and upward. So our firm belief is you have to scale with these good habits, because that gives you a better shot at de-risking down the road.
So who do you think of as your core customers, and how do you work with them day to day?
Yeah, I would say we ourselves are a startup, so I don't have an easy answer that we've landed on. But I would say we think of founders, and I would say investors secondarily as our primary customers. And I would say our most common way of working with them is essentially in one-on-one or small group settings and workshops. And I think we think of ourselves as part critical friend, part coach, and part convener. So we're bringing them together. We're trying to distill practices that we think are relevant to how they're building. And then we usually do some coaching, again, one-on-one or in small groups. So I would say that's the founder-facing work. And then the other part of our work, which I alluded to at the beginning of the conversation, was around convening. And whether it's on AI and workforce, what does responsible AI look like? How do you engage with governments? How do you think of engaging with a broader set of stakeholders? That's probably the way to describe it. So some of that is us convening those stakeholders to be in rooms together. We like to say that we build rooms that don't exist anywhere else. One, because most people don't engage with startups, and 2, because I'll give an example. From our AI and workforce event, we had policymakers, we had labor,
We had startup founders and investors. It's hard to find rooms where all of those folks are in conversation with each other. So the founder engagement teaches us a lot, in as much as we're coaching them. They're teaching us a lot about the technology and what's working, what doesn't. And then we try to bring those insights from founders to all these other stakeholders that are shaping the enabling environment in which startups are building and scaling. And we think that type of collaboration is critical right now.
And how do you find the companies that you work with? Do they come to you, or are you reaching out to them?
And it's a little bit of both. I mean, some of it is us going out to find them based on, I would call it some sense of readiness, right? They might be building in a particularly high risk area. We've maybe read some headlines about them that are less, optimal for them from their perspective. So some of us is being there. A lot of it is from GPs, VCs in our network who are bringing startups to us, or getting us into their portfolios, and we get to network with them. And some of it is quite organic. It's sort of none of the above, and they'll just show up at an event. And then it turns out they're like, oh, it's pretty interesting. And they might come back. And then they're like, okay, this is influencing how I think about what we're building, how we're building it, and so on. So there's a number of pathways to work with us, to meet us. But again, I would be, we're a startup ourselves. So we're still doing our own customer discovery.
Yeah. And what stage are most of the companies you work with at in their own growth?
I would say most of the companies where we have the deepest traction are sort of seed companies and beyond, meaning they've raised some money, they have some sense of product, they might even have some customers. I think if you're earlier than that, I think our general advice is that we have some content on our website that will help any founder think through the early days of sort of their most pressing to-do items, customer discovery, thinking about product design, data minimization, and so on. But, my advice to a pre-seed founder is like, go build your product, go build your prototype. And once you start to get some traction, come talk to us. Because often you don't really know what your risk surface area is, or what might be responsible or irresponsible, until you have a sense of your product in the real world, right? You're not just deploying it in a lab, you're deploying it into I think what the academic term might be, a socio-technical landscape. So we're finding our traction is with seed and beyond, where they've got some traction, they're building, and some of them are frankly scaling quite fast. And they don't have time to think about many of these issues. So that's why I think that's a sweet spot for us, is you're still early enough where your culture, your habits, your methods are still malleable. But we find even that later stage startups, they can calcify quite quickly, despite what they might tell you on podcasts or in their materials. So we think it's quite essential to get to them early. And I would say, candidly, not to be, overly provocative, George, but I would say we think obviously there's a lot of focus on big tech platforms, and for good reason. But, the real leverage is with the early stage crowd. And frankly, most of the innovation is with early stage. So I think if you looked at some of the most promising technologies and where they come from, it's going to be in the startup crowd.
Yeah, talk a little bit about how this work extends to the investor community too, and how you work with those investors that are looking at these startups.
Yeah, I think I'll come back to something I said earlier, which is this is very countercultural. So I think if you talk to most VCs, again, many will, from a values perspective, nod at you and kind of say like, that's nice. But I think if you look under the hood, few, if any, VCs are actually incorporating some sense of, whether you want to call it responsibility, safety, ethics, into their diligence process, into their governance roles. And just that incremental step of asking yourself, what is the worst thing that could happen with this technology? You're already asking yourself, what's the upside of this technology? Mm-hmm. If you ask yourself, what is the worst thing that would happen from a particular technology, it doesn't mean you won't do the investment at the end of the day, but you've asked a question that gives you a sense of how the founder thinks.
And hopefully that founder has thought about that question. And then two, it gives you something to kind of track, be mindful of, because ultimately the worst thing that could happen to a particular technology or company can bring that whole company down or create friction, right? I think the dominant pattern we see in startups over the last, let's call it 10, 15 years is move fast, scale quickly. And the friction that maybe you didn't address early in your company's life cycle stays with you. And it only gets more expensive to deal with as that company scales. So maybe for some people that's okay and good enough. From our perspective, that seems suboptimal. It's wasteful of money. It's super time inefficient. And it distracts founders, it distracts boards, frankly, it distracts teams from like constantly innovating. Is if you're just nagging with this, you've got these nagging challenges, frankly, to do with probably you didn't manage stakeholders very well. You weren't transparent. You didn't think about your risks in a particular way. And so I think these are just sort of basic concepts that people are probably open to, but when you start talking about it in the language of responsible innovation or, again, like trustworthiness, like people get allergic.
Yeah.
So we think for the investor, coming back to your question, for the GP, this is about just incorporating incrementally some behaviors in the existing functions you already do. It's in your diligence. If you have a board seat, it should be part of that conversation. It doesn't have to be the first thing, but it should be in the conversation. It should be thinking about how do you lock that mission when you're thinking about exits, when you're thinking about governance structures. So long way of saying is like there's plenty to do for GPs. And then I think for LPs, if you have LPs in your audience, which I think you do, our sense is they should be engaging with GPs on some of these topics. And just even asking the question of like, what do you do in your process would be a good start.
Yeah. I was going to ask, because we have a sense that a lot of the LPs in our network so far are starting to have those conversations, but it feels pretty unstructured and maybe they're not sure what to ask or sort of what to push.
Well, one, if they're not sure what to ask, they should just reach out to me, and we'll give them some of our compliant, I don't want to say compliant, but our sort of methodologies that we can translate from the founder to the investor. So I'd say, sorry to be self-promotional, George, but they should come talk to us. But I think also, in my experience talking with LPs is, there's a tendency to want to like have the answer or to know the thing. The answer is like, we're all trying to figure this out. I mean, one of our, I think I'll give credit to my board chair, Hemant Taneja, who's the CEO of General Catalyst. He says like, we're living and working through peak ambiguity right now. And because we're in peak ambiguity, it's going to be real hard to know the thing to ask. So I think that what I would suggest and encourage your LPs is to pick up the phone and call their GPs and say, hey, like I've been reading about these lawsuits against AI companies. Like, are you seeing that? What do you say? I mean, some of this is just like intelligence gathering. Like, what do you see? Do you see what I see? How are you like, let's take data centers, for example. I saw a statistic that said maybe half of data center projects in 2025 were delayed. Some of that is because stakeholders and communities don't want them.
Yeah.
So like if you're big into acceleration and growth, that's kind of a major bottleneck. So I would say like to the companies I'm working with or investing in is like, what do you see? Like, how do you see that?
Yeah. That's interesting on the data center piece. I just saw a headline today actually that Microsoft has announced some new like, community-friendly data center approach.
They won't take. They announced last week they won't take subsidies or public subsidies. I mean, maybe there's some other announcements today, but yeah, they were taking a step in that direction. So I think, I think it's even just asking a question to people incrementally closer to the technology will yield learning. I think in my experience with VCs, asking their point of view is constructive. It's not confrontational, and it just reveals their thinking, and that's a good thing. It's a good conversation. I've heard from some LPs, well, VCs are a relatively small percentage of our portfolio, and so it's like we don't really have to, we're focused on what Microsoft is doing or Google. what the big techs are doing because that's where the energy consumption is and that's where this is and that's where that is. That's fine. Somebody should do that. But again, what is 5% of your portfolio is the lifeline for the VC ecosystem. And you have enormous influence, if you choose to use it, on how GPs engage and think. Because I would even say even on climate, which I know is really important to, I think, many of your listeners, VCs are maybe like the one part of the sort of one asset class where I don't know that they even think about this. Companies will think about it as they scale, but I'm not sure VCs are generally tracking this. So my encouragement, to borrow from another investor in our community, would say, like, what's the max min that you need to kind of get some basic information? And then you can always refine and sharpen whether working with us or with others.
Yeah, gotcha. A couple things to pick up there. One is like just the speed seems to always be an issue with startups, with VC. It's like there's this fear of missing out, particularly in a big rush like this. And so, I mean, it seems to me what I'm kind of hearing is like there's some benefit, maybe short and long-term benefit, risk reduction, and kind of slowing down to speed up a little bit and like stop pausing to think about these issues as opposed to just rushing right in. Is that sort of a fair assessment of what you encourage? Or do you think
I'll push you on that, and and I think you can push me too. I think if you are building, let's say in the generative AI space, you are in a foot race right now.
Yeah.
And I don't know that it's so much like a slow down to speed up as much as actually if you build this in as you go, you will increase your speed over time. And again, because of where these startups are in their early stages, there's no like such thing as perfect. And there's no such thing as complete de-risking, right? But asking, again, I'll come back to this very basic question of like, what's the worst thing that would happen with my technology? And if the answer is, I'll take an example that we've seen very tragically in the news, the worst thing that could happen is children are engaging with these AI chatbots, and they, I'm not going to assign causation or, that's not my lane, but you have children causing harm to themselves. We have children who've killed themselves. Yeah. And at least there's a conversation that their experience with that chatbot was a contributing factor to that very tragic outcome. And if you are a really smart technologist who's building world-changing technologies, my firm belief is you are smart enough to anticipate that. You may not be able to prevent that 100%, but surely you could put up some basic guardrail that minimizes the chance that that's happening. And you could do that without really slowing down. Because we can see that once a company gets sued, they will turn around in a heartbeat and have guardrails in place. And so my whole thing is like, these are some of the smartest people in the world. They can do this. Like, it's about not taking shortcuts.
Yeah.
Because shortcuts actually don't speed you up. They just end up increasing your costs and delaying you and just creating friction and reputational costs. Those risks and reputational costs compound in a negative way. So I think like that is like very strongly what I believe, that it is not so much slowing down. It's like doing the right thing incrementally at the right time. Yeah. Which we'll see. Let's take manufacturing. I'll give you another example, George. Sorry. Mm-hmm. So to belabor the point, but in manufacturing, we now are at a stage where quality in manufacturing is table stakes for any serious company. And that wasn't always that way, because back in the old days of the Industrial Revolution, quality was seen as expensive and somebody else's problem. Mm-hmm. But obviously that's not the case anymore, right? Like, you can't build cars that way. You can't build airplanes that way. You can't build like household appliances that way, things that are in people's homes. Mm-hmm. And so I think this is catching up with tech to say, we have to do it right. We have to do it right the first time. And it turns out we can do it and still be fast.
Yeah. Yeah. That makes perfect sense. I mean, I guess I was alluding to just, taking the time to come to your events, to have these conversations with their investors. Yeah. But you're saying it doesn't necessarily slow you down, but being thoughtful about it along the way is going to speed you up in the long run.
Yeah. And these are, I think the biggest challenge we have is reminding founders, reminding investors that these are not, quote, like ethics questions. Mm-hmm. These are business questions.
Yeah.
Increasing your risk surface area is not a responsible, yes, there may be an element to it that is a, quote, responsible innovation, but it is a business question. If your customers will be harmed by a product, that is a business question. If the communities you work in will create friction for you, that is a business question. So you're asking yourself a number of business questions. We want to increase the sort of, we want to like slightly broaden the aperture of what is in that first order of business question.
Yeah.
And that is essentially the mission we have.
Yeah, that's great. I mean, I think it's very analogous to a lot of the other sustainable investing concepts, right? Of just sort of, as you say, broadening your boundary of where your impact's going to be and where you might get some
impacts the
feedback.
bottom line.
Yeah.
Right. It impacts the bottom line. And once people see that, they start doing it on their own.
Yeah.
And that's ultimately what's it.
Yeah. A big piece of that we talk about in a lot of these contexts, and you mentioned earlier, is the governance piece. And would you say that's pretty core? And what does it look like from, those different stages of a company's development? When you start with just a founder doing the governance and then build out a board, do you help them think about that?
We talk about this a bit. I mean, again, I think for the earliest stage founder or two founders, I was talking to two founders a couple of weeks ago in Seattle, and they got this great idea for a product. And the first thing they wanted to tell me was the fact that they were a public benefit corporation, which is great. That's a perfectly good thing to do. So I think you could think about governance and responsible innovation as early as the structure of your business, right? And whether you're a public benefit corporation or not, how your voting shares are allotted. Like essentially there are ways to lock in your mission and values as early as that structure stage. Mm-hmm. So I would say that's important for people to think about. But just because you're a public benefit corporation does not make you responsible by itself. Because you still have to make those decisions and trade off day in and day out. And if you're a vanilla C corporation, just because you're not a public benefit corporation does not let you off the hook to be thinking about these issues again that impact your business long term. Like the goal is to build an enduring business, and to do so requires you take into these things into account. And frankly, in this era of technology, you have to do it earlier. Compared to your big tech peers today who kind of dealt with it later, you have to deal with a lot of this stuff much earlier. The tech is just much more powerful. And if you're doing robotics, quantum, other features where a lot of these trends will compound with each other, it's like even more table stakes. So I would say when you talk about governance, I think a lot of people talk about structure. Yes, that's super important. Mm-hmm. I think the board role is very important here. It's a little hard in the early stage because it might just be the two founders. So, but then it becomes more of a practice, right? Of all right, what are we, even just taking an hour, half an hour, and it could be with each other. It could be with a trusted advisor. It's like somebody who's going to push you to say all right, let's kind of scenario plan a little bit right now.
Right.
It's stuff you're probably already doing, but you just got to peel the onion layer one back. And maybe you'll reveal information that you can't action right now because you don't have the resources. But even just having the information
being aware of it
is optimal relative to not having the information. I was talking to a very early employee at Twitter, who's obviously Twitter is many iterations from where it started, but he was reminding me that some of their challenges at the early days was just keeping the site going and preventing it from crashing. Once they were able to do that, one of their next challenge was they were blindsided because they didn't have the right information. They weren't looking for it. Mm-hmm. And then their next challenge, once they started to gather the information, was, well, we didn't have the right decision frameworks. And we didn't know what to do with it. So people will shortcut to say, companies have bad values. That, I'm not going to say that doesn't exist. But a lot of it, and especially what we try to do at RAL, whether it's the governance or others, how do you get better information? How do we help you make the decision with it?
Yeah.
And, that can show up in governance, capital G. It can show up in sort of practice day to day. It's got to be in both.
Yeah. Another point that you kind of alluded to, I just want to underline, is kind of what you're just talking about there, how some of these things get embedded into the company early on and how some investors are kind of more focused on the big companies. It's presumably much harder to change those things when you have a massive behemoth, right? But some of these startups
100%.
Could be the next massive behemoth.
100%.
So that's,
Yes. I want to say it's impossible. Nothing's ever impossible, but it is very, very hard to do. Mm-hmm. And I welcome from your audience, contrary points, but, I think we see that leverage. And I think again, if you know the startup ecosystem, the founder is sort of the hero of the story for good reason. They're the one often originating the idea. They're the one who maybe built the technology in the first place. So there's a good reason why they would be seen. And if they're not heroes to you on the outside, they're certainly heroes to other founders. Founders look up to other founders. And again, so much of what you'll hear in the startup ecosystem is the founder imbuing the organization, the company, the startup with their personality, with their traits. And again, so we think the founder is essential to this idea of responsible innovation, because if they don't imbue the organization with it, it's highly unlikely that startups will take that on organically, in our opinion. It's not to say they won't, but it's harder if the founder's not invested.
Yeah, makes sense. Coming back to the LPs a little bit, how, like, are there ways for, we have a lot of endowments and foundations in our network. I saw you had a couple of the founding members were Oxford and Princeton, a couple big endowments. How do they tend to get involved if we have some that are interested?
Yeah, I mean, we tend to organize, we try to bring LPs into our convenings as well, because we think it's, again, they should be part of this cross-sector discussion. Often we like to bring LPs together with their GPs, because then they can kind of be in conversation and even put some of that into action. So I think the first thing for us, and again, whether they work with us or not, is to just dispense with the perfect being the enemy of better. And we are all about, I think there's a certain amount of this that's getting smart on the technology itself.
Yeah, I know there's a big demand for that, for sure.
Which I would say is great. And, there are many places to get that kind of information. But I think when it comes to how does it impact your bottom line and your fiduciary duties, that there's both looking at it through the employee lens. There's also obviously looking at it across your portfolio, because you're going to need some common through line, much that I sense that LPs somewhat have with climate and sustainability, that they would think about this sort of in a coherent way across their whole portfolio. So I think, and then there's also like you as a user, right? I think the LPs will be figuring out how to deploy AI themselves, which will have impacts on their workforce and their processes. So I think there's many layers to this for LPs. One is, again, let's repeat myself, is getting smart on the technology. How are you going to deploy it yourself? How does it impact your portfolio as a whole? And then if you are an LP with whether let's say a pension fund with a particular focus on your beneficiaries, my encouragement would be how this impacts your workers will have, significant impacts on your investment strategy. Right. I think if your beneficiaries will be automated out of jobs, my guess is that will change your investment thesis, or at least impact it. So I think there's a lot of angles here. And most importantly, I would say find just, constructive voices who don't have anything to sell you, who will help you with this. And, whether it's RAL, we're a nonprofit, we're funded by philanthropy. I mean, we'd raise our hands, and you would raise your hands, I'm sure, and others as well.
Yeah, but it's great you guys have that ecosystem going, because I think there is a huge need for it. And everyone's moving forward and doesn't want to miss out, but also wants to be smart on what's going on and to do it right for the long term. Nice. Well, we're starting to get short on time here, but I did want to ask a little bit about policy as well. Like, how much of a factor is that? Obviously, that's a huge question mark, how that's going to shape up. But is that a big part of helping founders navigate what might come?
Yeah. I mean, we certainly, I'd say we do this in two ways. One is we help founders navigate the policy ecosystem. Some of that is through look, our job is to accelerate a founder to make better decisions faster. So some of this is like, how do you, founder, allocate scarce resources as you're engaging with policy? So I think we try to coach founders on that very topic. And then it's part of that's helping them with relationship building, helping them navigate the ecosystem, and so on. I say the other part of the work is translating for founders what the policy ecosystem is talking about. And we can talk about, if that's interesting to your audience, sort of what the prognostication is for a policy in a particular realm, but then also translating for policymakers how founders interpret what they're proposing. And that's been one of the most fascinating parts of this job for me, is sitting between two sets of people that rarely talk, but actually being able to translate. We take great pride in that. We take great pride in being able to translate. And even encouraging policymakers, I might want to frame it a little differently. and founders to help them understand the incentives of the policymakers and vice versa. And not to say that there's always going to be alignment. There often isn't. But how do we navigate that friction in a constructive way? So bridging, translating, and helping founders sort of allocate their resources effectively.
Yeah, nice. Just, I guess very quickly, I'd be curious, on a high level, what are you seeing in terms of like, is there founders have appetite and see a need for smart policy and just want to make sure it's smart? Or is there sort of an attitude of like, we don't want to be regulated at all? Or does it vary?
Yeah, I mean, of course you'll get, I don't think any founder I know is like screaming to be regulated.
Sure.
It's just not, I think in like the business person's like mindset. I will say the founders I know want a couple of things. They want generally a level playing field. They don't want to be boxed out of opportunity because some incumbent has used lobbying or the regulatory infrastructure to push them out of a opportunity or a level playing field. So they want that.
Yeah.
Every startup I know wants clarity, right? Because the only companies that can deal with ambiguity, particularly on the regulatory side, are the big tech platforms or big incumbents. I would say even some of the big incumbents we know, think there should be some rules of the road. Because they are major deployers. They are major buyers of this technology. They want some assurances as between the relationship between developers and deployers. So I think clarity, allocation of risk, level playing fields, these are the things that I want policymakers to focus on. Because the way I wrote about this recently in a piece in Fox News of all places, but where I was like, too often people are talking about the needs of 3 or 4 big tech platforms, and which obviously that's important. They have a seat at the table too. They shouldn't be the only ones at the table. And really what we're about to undertake is major economic transformation. And the question policymakers should be asking is, what's the government's role in that economic transformation? And how do we allocate and set up that infrastructure in a way that is good for innovation, it's not going to leave a bunch of people behind, and hopefully over time increases opportunity within societies, increases cohesion within societies, increases sustainability. So, that's not necessarily what we see right now. I would say right now policy is largely driven by the needs of 5 or 6 large companies.
Yeah.
And I think that's suboptimal. And startups are generally not in that picture either.
Yeah. Yeah. Interesting. I'd love to dive much deeper into all of that.
That's like a different podcast. That's
I know. I was going to say, hopefully I have a chance to get you back and keep these conversations going. But before we kind of move on to wrapping up and our last kind of quick questions here, anything else kind of big that we missed that you want to cover or make sure you get out there?
Just underscoring, I mean, LPs have a huge role to play in this. And my encouragement is that they'll, engage, even if we don't have all the answers, because somebody else in the ecosystem, I guarantee you, also does not have, but most other people don't have all the answers.
Yeah.
So just really underscoring that. And I'll leave it there.
Yeah, we'll definitely put, links in the show notes and all that and keep getting this stuff out to our network. But yeah, just how we wrap up every show, a few rapid fire questions for you. So what's one policy or practice that you kind of just wish every startup would get going from day one on these topics?
Yeah, from the earliest days, I think you need to be able to communicate to your investors, your employees, and your customers what your thesis is on, let's call it responsible innovation, right? You could call it decision-making trade-offs. Your employees will want to know that because they want to know if your values are just wall art or if they actually, and just mimicking Amazon's 14 or 17, whatever it is now, operating principles that's like wall art for you. So I think having that is super important early. I think your investors will want to know that too. If you're a public benefit corporation, I'll give this as an example, your investors will want to know, why did you pick that? Mm-hmm. Because some of them might worry that that's going to come at a cost of their returns at the end of the day. Mm-hmm. So you need to be able to explain why you're making the choices you're making. And it's not enough to just say I'm this or that, or I'm responsible. And I think even your enterprise customers, you go to consumers, people want to know. You take them for granted or not. So I think having some lightweight, whether it's statement of purpose, general rubric on trade-offs, is not to say that you're going to be perfect. It shows you have your act together.
Yeah.
In a way that most startups don't.
early, and then you'll evolve that over time. So that could be 1 page, it could be 2 pages, right? It doesn't have to be super complicated, but you'll see for a startup that will come in handy on things and audiences you already care about and you already need to persuade.
Yeah, I love it. How about what's your biggest hope for AI and your biggest concern?
I mean, biggest hope for AI is, I think 2 things can be true. Like, this is a good time to be alive by all indicators in human history. And we still live with great inequality and scarcity around some fundamental needs, be it healthcare, clean environment, general wellness, education. And I hope AI will accelerate that sort of ability to eradicate scarcity, to create the conditions for flourishing. I mean, I'm a firm believer that individual work ethic and desire still matters in this world. And so I think AI is an enabling tool above anything, but I'm optimistic that it will enable more flourishing and progress overall. And then I think, the concern is, what are we optimizing for, right? I think if we get carried away to optimize for, I don't want, there's an old quote, I think it was from Peter Thiel, who, I probably have my differences with Peter Thiel. I think you'll have to fact, but I think he said, we wanted flying cars and we only got 140 character, tweets. Right. And I think we could say the same thing, something similar for AI is like, I want abundance and flourishing, and I'm going to get chatbots that, tell me,
Spam me or whatever,
like that spam me or, give me disinformation or, keep me siloed and isolated and antisocial, right? Like, that's not what we need, right? So, but that a lot of that goes to like, what do investors and builders think we're solving for right now?
Yeah, it's a great point. I mean, people have agency right now to see how this gets.
Right, builders get to decide what they built, investors get to decide what they're investing. And at some level, consumers get to make choices too. But I'd say really like builders and investors. And I think why the private markets matter so much is that is where the acceleration will come from. And those choices have to be made early. And there is freedom in that choice, which is pretty amazing. And I want founders and investors to embrace that freedom, not because government tells you to do it, but because like that's the society we want to build right now.
Yeah, exactly. What's the purpose of all this? Nice. How about a book, a podcast, some kind of resource that people interested in these topics should check out?
Yeah, I think if you're interested in AI, we spend most of our time, George, talking about AI, but I would say like some great podcasts, and I don't mean to like, flack for, other platforms per se, but I think there's great learning to be had from a podcast like Stratechery.
What's it called?
Stratechery.
Stratechery, yeah.
Stratechery, yeah. And it's just a great, I don't know that you're going to hear a lot about responsible innovation, but I think you'll hear a lot about where these platforms are going, the business side of it. I love Acquired, which is a little bit more retrospective, looking back at companies and sort of what went into them becoming kind of enduring brands, as it were. And that will be both tech and companies like Nike or Starbucks. I think it's just sort of a great way to geek out on those. And then I think you have a number of policy but the Verge has a great podcast, Decoder, where I think you'll get a little bit more of a pointed look at the technology being built today. And I think it's super important for everyone to understand, like, what are the competitive pressures? So I would say like there's this category of podcasts, and I'm more of a podcast guy, where I think you will get a lot more timely intel than you would maybe from a book sitting on the shelf from 2 years ago.
Yeah, I know.
Although reading is very important. Reading is very important, but I think it's
amazing how
very
fast
important to.
Yeah, it changes. But yeah, podcasts are great. I just picked up and I'm getting started on it, but Governing the Machine. Have you read that one?
I have not read Governing the Machine.
Yeah, but just came out this summer, but it's already like started to feel, things keep changing so fast.
We need these methodologies to kind of be applicable across these circumstances, right? So
yeah,
I think that's a big part of our approach is you need methodologies. You don't need, You don't need like strict rules.
Right. More principle-based things that will be
Exactly.
applicable as things
Exactly.
change. Yeah. Nice. And how about when you're not busy working on all these issues? What do you like to do in your free time?
I'm usually out walking my dog, probably listening to a podcast as I'm walking my dog. As I've got 2 young kids, so they keep me plenty busy. And I think I'm trying to live into social relationships and being with people right now, because I've been reminded that can be very life-giving, and that's another form of taking care of yourself, right?
Yeah, I love that.
No substitute for being in person with other people, even for an introvert like me.
Yeah.
It's very important. So I think that those are things I'm trying to work on and get better at.
That's great. No, you keep hearing it more and more. I think it's a result of COVID and working from home, and then social media and sort of the social isolation aspects of some of these technologies that I think there's a real chance there's a little bit of a return to that in-person communal hanging out.
It's exactly. And we should have fun enough to be in a peaceful, safe, and secure place. Like having fun, building relationships, those are good things.
Mm-hmm. Nice. All right. And then our final 2 questions. What's your vision for the future of finance?
Well, you're gonna have to edit out my small talk here. But my vision for the future of finance would be one. Again, I think these trends are compounding, and I hope, particularly for investors who care deeply about how their capital shapes the world we live in, that we think about these trends in a compounding way, that it's not just sustainability, but actually sustainability meets AI. AI will meet robotics, will meet workforce. And we will rarely, if ever, have a crystal ball on how these trends turn out. But I think sort of thinking about them beyond a set of carbon metrics, but actually thinking about them as interacting features in a system, in a society. And maybe that already exists, George, in your stakeholders, but it's certainly something I'd like to see more of talked about publicly, because I think that flows downstream to GPs and frankly to the companies operating.
Yeah.
So that's my hope in finance, is they wield enormous power, and I hope they use it, and I hope they use it in ways that are just smart with the way our future is heading.
Yeah, I love that. No, we're dealing with these complex systems, so thinking systemically about it all is necessary. Awesome. And how about our final question? What kind of advice would you give, to college students or young people, particularly interested in kind of jumping in on this AI gold rush? What kind of advice would you give them?
Yeah, my advice is one, to, like, I would say this sort of, I'm going to use this spiritually more than go build something. It doesn't have to be a company, like my first career was actually as a public school teacher. We didn't talk about that earlier, but like go build something, teaching a class, building a school, building a company, running a campaign. Those are all different flavors of building something. And I think that gives you, maybe I'm biased, but I think that just gives you, one, it just cross-trains you in a different way than jumping into a specialized skill set. And 2, I think it sort of just reminds you of the great capacity you have to do a thing, to create change in the world, which is fundamentally what building a company is. It's what government is. It's what all of these forces are. They're all different forces and ways of changing the world. Finance is a way to change the world. So I would say go build something. And then I would say, again, back to, earlier, is like, develop your own set of methodologies and keep iterating on them, because you're going to technology today will be very different than 2 years from now, 5 years from now. Think about, I was just reading something about, I'm a big football fan, George. So my favorite team, their coach was let go. And I was thinking about, to the last time my team was looking for a coach, and the iPhone was in version 2. I don't think Uber or like Lyft was around. Just like all the things and obviously generative AI was not, like, it was a thing in academic labs, but it wasn't really a thing commercially.
Yeah.
And that was like 15, 18 years ago. So I think just give yourself the methodologies and the comfort, right? Just accept resistance is futile, accept that this change is happening. You got to give yourself the tools to navigate it.
Yeah, that's great advice for being resilient and successful, I think, in this changing economy. Awesome. Well, Gaurab, thank you again so much for coming on. Like I said, we'll have to get you back because we'll find more to talk about on all this stuff. And hopefully we'll talk again soon.
Yeah, look forward to it. Thank you, George.
This episode has been brought to you by Metis Global Partners. Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.